New prop firms are falling like dominoes. Here's why. Every month, a new prop firm collapses. Traders are left stranded, payouts vanish, and trust in the industry crumbles. From day-funded to funding engineers, Karma Prop Trader, which collapsed within just 1 month, and the most recent Indigo Trader Funding. These firms promised success but delivered only disappointment. But where did it all begin? The first major collapse that shook the prop firm world was Funding Talents, the firm that started the downfall. But why did it fail? And why have so many others followed suit? Funding Talents' collapse was simple yet devastating. Poor business practices, unsustainable growth, and mounting withdrawals that spiraled out of control. In the end, they couldn't honor their commitments, and it all came crashing down. After the downfall of Funding Talents, prop firms like FTMO, which had already established itself as a major player, continued to dominate the industry. FTMO, one of the first and the biggest leading prop firm in the market, set the standard for how these firms operated. It revolutionized the space by offering traders access to real funds after completing their challenge phases. My forex fund soon followed, giving traders a similar sense of security and opportunity. These firms became the benchmarks for the entire industry, defining what a successful prop firm should look like. But even the giants weren't immune. My forex funds, the very firm that helped redefine the industry, was taken down by an investigation from the CFTC, exposing staff misconduct and deceptive practices. Traders were misled, payouts were withheld, and the collapse sent shockwaves through the industry. After my forex funds shut down, traders were left scrambling for alternatives. This gave rise to new firms like Funded Next, Funding Pips, and others. But the promise of real funds changed. These firms now admitted the truth. Traders weren't trading real money in the live phase. It was all simulated funds. From 2021 onwards, we saw companies like Funded Trading, Alpha Capital, and many others adapt, acknowledging the reality and trying to fill the gaps left behind. The industry continued to grow rapidly, with new firms popping up almost every year. But why have so many prop firms emerged so quickly? Because starting a prop firm today is easier than ever. You don't need huge capital. Third-party tech providers control the market, offering ready-made platforms that allow almost anyone to start a firm overnight. But with that ease comes a massive downside. These providers are monopolizing the industry, leaving most firms dependent on the same few tech companies. Then came the next big swan event that shook the industry to its core. MetaQuotes, the company behind MT4 and MT5, cut ties with prop firms. Suddenly, brokers could no longer provide trading accounts to prop firms without risking their licenses. Many firms had no choice but to shut down or scramble for alternatives. This opened the door for new platforms like MatchTrader, DXTrader, and TradeLocker, giving prop firms the tools to continue operating without relying on MetaQuotes. But it also marked a major shift in the prop firm landscape, forcing firms to rethink their entire business models. And this MetaQuotes decision hit us directly. We were close to closing a deal with a third-party provider to use MetaTrader 4. In hindsight, not going through with it saved our company from potential disaster. That moment was a wake-up call. We knew we had to forge our own path, a harder path, but one that would guarantee sustainability. So instead of relying on third-party tech, we made the decision to build our own in-house technology and trading platform, a fully independent ecosystem, free from any third-party control. Since January, we've been working closely with our development team, and though I can't give an exact launch date yet, good things take time. We're very close to delivering our final product. During this period, the Funded Trader was one of the industry's giants. It didn't just operate its own firm, it powered the tech for others, like skilled funded traders and influencer-led prop firms. But in March, everything came to a halt. The Funded Trader paused operations, and the firms reliant on its tech followed suit. The reason? Liquidity issues, compliance challenges, and a heavy reliance on external tech providers. Without their own infrastructure, these firms were vulnerable, and when the tech failed, the firms collapsed. This is the Achilles heel of most new prop firms today. No product of their own, relying solely on marketing and third-party tech. I'll admit, some are great at marketing, But without a backbone, it's a house of cards waiting to fall.